question for the Nanjing guys. I don't know if you're available, Sam.
Sure.
Basically, well, two questions really. I mean, I've had one question talking about there's a perception amongst some people that Vietnam is an up and coming region, and actually, if you move a little bit more towards maybe Indonesia, maybe Philippines, that's a risk. That's one kind of question. But another one is like the trend towards deglobalization, right? Because since the pandemic, because the great hope of globalization was it would liberalize authoritarian regimes in China and beyond, and obviously it hasn't happened. The opposite's happened, right? As they've got wealthier, they seem to have doubled down on what they were doing. So do you think kind of deglobalization is a risk, including for Vietnam and ASEAN, or do you think the bigger trend of manufacturers leaving China towards the cheaper places is far more important?
It depends what you're manufacturing, and I'll let Alex also join in here as well. But majority of the manufacturing what comes out of Vietnam is difficult to be replicated elsewhere at the current cost. So unless global inflation is currently running at about 7 to 8%, unless inflation is going to be running at significantly higher levels to accommodate for the additional costs for manufacturing outside of the region, which is highly unlikely, it wouldn't really be a practical solution. And also one other thing to stress is there's significant inter-Asia business, and it's not just about manufacturing for the West, but there's also a lot of inter-Asia manufacturing to each other to produce goods which are then built up and put together in the West, more sophisticated industries. So that's also something to consider as well. And just on the first question, the guys are value investors, so we always look for opportunities. We're not saying that we're going to be putting the whole portfolio or 50% of the portfolio in Indonesia. We're just seeing some really interesting opportunities in Indonesia at the moment for some of the reasons which Alex touched on in terms of the currency and the valuation. So Vietnam has been a key driver of performance for the fund, but we're always seeking to try and look for new opportunities as well. So we do move the regions around, and it's more based on what we're seeing and where the valuation is. But I'll pass you over to Alex to see if he could put some more color on that.
Yeah, thanks, Sam. Yes, you pretty much answered it already, I think. Well, if you just look at the numbers, for instance, just look at sort of Vietnam export numbers to the US, there's no sign of deglobalization effect there at all. Actually, it's picking up steam. The total exports of Vietnam is actually now on par with a country like Thailand. So they have come very fast from in a quick way. And as Sam also mentioned, and that's a good point, there's a lot of inter-ASEAN trade, and that's, sort of not much so affected by sort of, what happens in the US or Europe. So overall, I'm not really worried about that at this stage, I would say.
I think just one other aspect to add, and Alex will laugh because I always say this on various investor calls we do, the size of the whole Vietnam market is smaller than just one region of China called Guangdong, which is one of the manufacturing hubs in China. So there's a significant amount to go at here, and certainly probably not in our lifetimes will there be a restriction in terms of the opportunity set in the region.